Welcome back to FSP Forex Stock Predictions. Hope you're all good. I am the Vortex Trader, and today we are continuing with our educational series on double tops and double bottoms. This will be video number 4 in the series. If you have not checked out the first 3 videos, I will link the playlist above in the right hand corner of your screen. Today we are going to be discussing how do you know when to enter a double top or a double bottom. Let's get into it. So it's all very well and good, right? We see these patterns everywhere, these giant M's, these giant W's. We know they are reversal patterns, they are reversal structures, and they occur at the end of a trend. But how do we know how to trade them? What's the strategy? What do we do? How do we know when to enter, right? Well, never fear, let's discuss it. Okay, cool. So let's take these two as an example, all right? We can see, let's start with this one, that we have a double top in play. Right, let's get this focused right there. Okay, I'm going to delete the circle. Here we go. Price made one top, it came back down, it struggled to break through this resistance and came back down, right? Therefore, creating our double top pattern. One top, two tops. Cool. So how do we enter this thing? How do we know when to enter it? Well, it's simple. When price comes down, it creates what we call a neckline, right? It is a zone which could encompass wicks and candles in this area right here, creating this area, right? The bottom of this V, the middle of the giant M, right? This is our neckline, and this is where we see a lot of liquidity, a lot of wicks, a lot of orders carrying on, right? This is a very important area, right? So what I will do when I see this pattern, I will always highlight the zone in yellow, right, encompassing all the wicks in this area, because it's never as clear cut as we want, right? It's always very possible that it could be quite messy, right? So we highlight the bottom of the support to the top of the resistance, okay? Once we have that done, we can label it. I would go ahead and label it as so. We would go like this, right? Where's my text? We'll put the text in there, and we will call it neckline zone. All right, let's put the writing a little bit bigger. There we go. Right, this area is our neckline zone. Okay, so what we want to see is price break through this neckline zone, right? We want to see price break through it. We want to see candles close below it to confirm that we have now pierced below this area of liquidity. We want to see the price and the candles close below it. Once we have seen that, then this is where the fun begins. Now we look for a retrace back up into the neckline. Okay, we look for a retrace. Let me just make this arrow just a little bit thicker. All right, so that's how we look at it. We look for a retrace. Price closes below the neckline and then retraces back into the neckline. Once it retraces back into it, that is when we can start opening up our positions. This is a double top, which means we are looking for long or short entries. Short entries, right? For those of you that said it, well done, right? So we take our short position tool, we put our entry somewhere in the vicinity of the neckline zone, right? Our stop will go. Now, stops are very subjective, right? There is a lot of noise in these neckline areas. So we have to make sure that we cover above it, right? We have to give ourselves some leeway, okay? And our targets can be previous price structure below. I always look for at least a 1 to 2 risk to reward with these type of setups. It's not worth it to me if I can only get a 1-to-1 or less than a 1-to-1, right? Once we see the retrace, our short position can be triggered and we can target previous price structure, and that is what it looks like. That it's as simple as that, right? We make our neckline, we wait for a close below the neckline, we wait for a retrace back into the neckline, and then we enter. All right. Now, there are different schools of thought as to where we should enter. When price touches the very bottom of the neckline or if price touches the very top of the neckline. This is subjective and this is decided by you as the trader. There is no clear-cut rules defining I will only enter when it does this or I will only enter when it does this. This all depends on you back testing the strategy and figuring out what works for you. Obviously, if we enter at the very top, right, of the neckline, we have a higher risk to reward. If we enter at the very bottom, we have a lower risk to reward, right? Look there. You see. So this one would only give us a 1 to 1.6 or 1.7, and this one would give us nearly a 1 to 3, a 1 to 2.9, right? And if we enter in the middle, we could get a 1 to 2.2. So it all depends on how you backtest them. Some guys will enter at the very top. Some people will enter at the very bottom. Some traders will enter in the middle. Okay, it all depends on how you backtest and what works for you. Okay, let's do the opposite. Let's scroll right and let's do it as a double bottom. Right, let's remove this circle. Right, now remember, what are we looking for? Let me just put a little candle there. There is one top. Here is another top. All right, yes, they are green and red. It does not matter. Okay, right, we're going to have our neckline zone right over here. Right, now because this is a double bottom, this is the top of the middle part of this W. This is our neckline zone. Let's label it. All right, neckline zone. Right, we want to keep things clear and easy and simple to understand. So what do we look for? Same as the other one, right? We look for price to close now above the neckline zone. We want candles to close above these liquidity orders, above all this noise in the center. Once we see that, we then wait for a retrace back into the neckline zone. Once we see that retrace, we take our position tool and we enter, right? Targets can be previous price structure. Stops are subjective, like I say. If there is noise in the center, try and give yourself some space, right? So you do not get stopped out. And this is what it looks like. Now, before I show you this on a real chart, please remember and note that on these necklines, there can be a lot of noise, right? Prices can bounce up and down these necklines before eventually moving away and heading towards your target. This is why I say give your stop loss some room, but do not enter if you do not feel that your risk to reward is worth it. All right, guys, remember, there is choppiness that can happen in these neckline zones. Why does that happen? That is because market makers and institutions know that us retail traders, we trade these patterns, and they know that. And they know that people place their stops pretty tight, and they could easily stop us out, right? Because there can be a lot of noise, right? There can be a lot of noise. So we have to make sure that we have enough room for our stop loss. Okay, now if I scroll down, we have a perfect example of a double top right there. Look at that. Check this out, guys. Look how perfect this double top is. Right, what do we see? Right, we see price moving up, making one top, coming back down, right? Creating this neckline zone, coming back up, and look what happens. You see how it's not as clear cut as the examples. Look how price came below. Yes, but the wicks did not close below the neck zone, right? It went back up, came back down again, and then we saw our close, and then we saw our retrace. You see? Close below, it retraced back in. For those that never caught that one, we could have waited even longer, right? We could have waited. Price came below, and then eventually retraced back up to the neckline, and in this case touched the very bottom of the neckline. So what would we have done? What would we have done in this scenario? We would have taken our short position tool, all right, placed our stop somewhere above the middle of the liquidity. Remember, look at all this noise. You see, it's not just perfect candles that close without wicks. These wicks are out there to get us. Okay, so, and look at this. Price just touched the bottom of the neckline zone before carrying on south. And previous support over here would have been this and this, which would have given us a 1 to 2. However, we could have held on and made, in this case, this is the euro versus the US dollar, right, on the 4-hour time frame, and this is in the beginning of the year, January, February, right? And we know right now it's 1 to 1. So this would have given us a risk to reward of something ginormous, because this yellow thing you are seeing right here is a daily descending channel. And it goes all the way down to 1.0, right? Because we now know that the euro and the dollar, currently it is the 19th of July, is sitting at 1. It's square with the dollar. The euro is square with the dollar. Okay, it's 1 to 1. All right. But you can see that this would have at least given us, if we would have exited on a 1 to 2 risk to reward, it would have been perfect. Okay, guys, so patience is key. Back testing is key. But remember, how do we do it? We wait for price to close below the neckline zone, and then we wait for a retrace back up to the neckline zone to retest it. Because simply what it's doing is flipping previous support to resistance. That is all that the pattern does, right? It just flips from support to resistance, and it retests that resistance. It collects liquidity from the neckline zone, because we know that there is a lot of liquidity and orders in this zone, and then it has enough orders to push this price lower. And that is how we enter these double tops and double bottoms. Now, I ask of you guys, go through your own charts, go through them, right? Find these patterns yourself. Mark up the two tops, mark up the neckline zones, and see if you can trade them. Trade them, go and backtest it. Trade it over time. See how you would figure this out, right? It is a fantastic pattern, and they occur everywhere, all the time. All right, guys. So on that note, let me wrap up this video. I really hope you enjoyed it. If you did, please hit that like and subscribe button. Hit that notification bell so you will be notified when we upload further educational content. And on that note, I will be seeing you all in the next video. Thanks for watching. See you later.